Hello and welcome to Fresh Thinking by Snowden Optiro, a podcast where we delve into the technical aspects of the mining industry. My name's Tarrant Elkington, General Manager for Snowden Optiro here in Perth. Today we're moving on to part 2 of our podcast series, talking about banks, their involvement in the mining industry, and how people can best, how mining companies can best, work with banks towards financing projects. And joining me again, I've got Bob Jankovic, who is an executive consultant with us in Toronto, Canada, here visiting us here in sunny Perth. Bob has more than 35 years of experience across the mining industry, in working with banks as well as mining operators, consulting, and across a range of different geographies. So thanks very much for joining us again.
Well, thank you. Thanks for having me.
In the previous podcast, which I encourage you to go and have a listen to, we talked about the different types of ways that banks get involved in financing of mining projects, the debt and the equity side. We focused on the lending side. And in today's podcast, we're going to focus more on the investment banking side. And so what investment banks do, how they interact with mining companies, and what mining companies can do to best ensure their success with those investment banks in developing their projects to different points. So and I guess, from the previous podcast, Bob, you've got probably worked more than 10 years in within investment banks as a technical advisor to them.
Yeah, that's correct. Thanks for introductory. I was 8 years with Scotiabank on investment banking and partially working on the lending at the same time. But my primary role there was investment banking, and it's a very, very interesting position actually, and required a broad range of skills and experience of one technical person to be at that spot, which I was blessed to have due to my career path that I had, which, when I say that, which means multiple commodity experience, then multiple operational experiences, open pit, underground, exploration, early stage, advanced stage, brownfield, greenfield. I did all that luckily in my career, and that's what attracted, I guess, my profile for a bank to approach me and ask to join them. And I really enjoyed that experience, and I gain a lot. So I learn quite a bit how the capital market works, and as a technical person, really gives you very good leverage and experience to understand what takes to raise money and what's the risk really that we create potentially if you don't validate on the technical side project the way we should. How big money are in the game, and what's the high risk for investors if you don't do that properly. So it was quite a good experience.
Yeah, and and very relevant, and obviously that something that I'm a big advocate for is tying the technical and the economic side of mining projects together, right? Because that's
Absolutely
kind of what it's all about. Can you maybe just explain to us the difference between like what an investment bank does, or the investment bank arm of a bank versus the lending function? What's the key difference?
Yeah, the main difference among many differences, but the key is that in investment banking, first there is a multiple ways to support and help mining projects, and at the multiple stages, from very early stages to the advance and the operational production, then on equities, and then on mergers acquisition. And we are in a position to really evaluate different projects on different levels to understand which project is really creating some values, but they're ultimately doing that just to create a value and to bring the project to the market and let someone else who knows how to do that to develop, which is very great platform I found, and very good way to increase the values and to decrease the cost, and to effectively bring the projects and give to the experienced teams, big guys, big companies, good projects to develop, rather than struggling with a team that never did, because that's a big bite, taking it into your hands to develop the projects.
So you would end up, like, I guess there's a couple of functions there. One is providing equity funding to businesses.
Correct.
And then another one where you would act as a middle, person, in mergers and acquisitions,
Correct.
not necessarily providing the funds, but connecting a buyer and a seller, say, for example.
Correct. Yeah, we recognize, where would be the best match. To simplify the process, for example.
Yeah.
And if some company approaches the bank and they are looking to expand, they are looking to replace, then we act as an advisory role, and try to find the best possible based on their portfolio, based on their market capitalization and size and on and on. And it's very good way how to bring a good companies together. And on the top of that, with Scotiabank, when I was involved, we work a lot on streaming deals. Scotia was at the time and bank with most activities on that part of the businesses. So that was another great experience, really, working with many streaming companies.
No, so that's it's quite a in my mind a very interesting contrast between the lending side that we talked about previously, a focus on, minimizing downside risk, to this part of the business that's trying to seek the opportunity. We talk risk and opportunities.
Correct.
Very much, two sides of the coin, but often within one organization, right?
Correct. And particularly in investment banking is interesting, where we act sometimes on behalf of the seller, sometimes on behalf of the buyer. And you gotta be critical equally and realistic as much as you can, and professional, regardless which role you're taking.
Yeah.
Is it buying or selling? And when you're selling, you're looking for opportunities to present. When you're buying, you're looking for risks. So it's a pretty good line and balance that you have to maintain and stay within that balance and professional approach.
And if you were part of a junior mining company, at what point, like how would it typically work? I guess if an investment bank saw there was a project that's high profile, there's that they would probably be reaching out trying to talk to you. But if the other side, when should a junior, how should they be trying to engage or get the attention of these investment banks to help fund them to continue their exploration work, their project development?
In general, honestly, I found during those 8 years in that role that I was very pleased to find that majority of the juniors, and they're obviously serious in developing their projects, they're really open for any advice. And they love seeing technical stuff within the bank because they speak same language with us. And they like dealing with technical stuff, which is natural. Yeah, when it comes to the investment financing, their executive team speaks to the banking team. And they take upon, particularly when they have confidence in the technical team the bank has, and they really engage fully and take advice. Have multiple meetings, technical sessions, you name it. It was very, very excited, some new momentum in a profession to be part of and to really enjoy. I really enjoyed that for the time being.
How much was I guess how much is the view of, and maybe it varies from organization to organization, but the desire to influence, not just be a passive investor, but to help, help shape value for the.
It's a big involvement here. Really, investors understand the industry. They're not necessarily specialized, of course. They didn't study what we did and what we do for many years or decades, but they understand the industry. Otherwise, they wouldn't be there. They're smart people. They know where to invest and how, and they ask unbelievable smart and intelligent questions. I was even on the other side of the game when I was with Dieter Gold, for example. That was one of the first biggest open pit mines. Now it's the second open pit mine in Canada, and it's high tonnage, 70,000 tons per day, low grade, but very successful. And it was very difficult projects, and it has a very bad history because it was once upon a time a mine that wasn't profitable when the gold price was 250 or 300 per ounce. And I was chief geologist responsible for developing resources, and I was in the front of investors on many sessions trying to explain on a technical point of view, but also to be on the level of investors to understand where they're coming from, and try to convince them that the project is doing well, that technically we are doing everything possible to minimize any potential error in a future development. And very happy, very pleased to see that mine now owned by Agnico Eagle, one of the most successful, the best gold mining producers. And it's a beautiful operation. So all that is just comes to the point for all of us. Doesn't matter if you're investing or professional side, to do a professional job and to the maximum of our integrity and knowledge and experience.
And maybe this put you on the spot, but coming from like one side of you're working for mining companies to come into an investment bank, I guess what was maybe the biggest surprise or learning that you, or shock that you got from crossing that divide that you kind of take away from that and moving into in consulting now, you know?
Yeah, it's a good point. Maybe one thing I would definitely influence, and that's maybe job of professional associations, to regulate the experience and the skills of the people who get involved in a technical with a technical kind of title and diploma, to start that they get involved in a maybe too early stage of their career. I believe truly that for both of these fields, consulting and financing, we need technical expertise that is skilled and experienced, that spent some time in operation. It's very critical. I'm truly believer and supporter for that idea, because it's very different when you gain operational experience, open pit, underground, and when you really make some dirt in a bush and spend the time in exploration projects and do yourself and understand what it takes for any discovery to become mine.
Absolutely. Right. So I think we might leave it there. But thank you again for joining us here, pleasure. Bob. And look forward to future podcasts and hearing more of your views on these topics. Obviously, the financing world is so important into the mining industry and the mining companies. So thank you for your insights.
Thank you. Pleasure.
So that ends another podcast. One of our podcasts is Fresh Thinking. Please, if you liked our podcast, please subscribe to us on YouTube, Spotify, or any other podcast platforms. And we look forward to the next podcast.